Have you always wanted to become a homeowner? Thinking 2023 might be the year to make this happen? Feeling excited about buying your first house, but also feeling a little nervous about the process that goes into buying that house? Well, in today's video, I'm going to take you through a step-by-step process of what to know when buying your first home. Number one, be confident you are ready to buy a house. Listen, there is so much that goes into home ownership. Taking the time now to sit down before taking that next step will really help you kind of navigate the pros and cons before you get too far in the process. A lot of people just look at the monthly payment and kind of compare it to what their current rent is without really considering anything else. Don't get me wrong, payment's very important, right? But sometimes it's not the most important thing, especially in the long run. What I mean is that as a renter, you're used to paying a certain amount a month for rent and utilities and not really having to worry about anything else that goes on with the property. For most renters, if something breaks, you usually just call the landlord or the management company to come fix it, and they do. This is not the case with home ownership. If you get a roof leak or your AC stops working, you have to get it repaired, regardless of the amount. These fixes and repairs can add up to tens of thousands of dollars over time. So it is very important to set aside money each month above what your mortgage is to help alleviate the stress when you have those things that need to be repaired. I would encourage you to set aside probably about $100 to $200 each month. Make sure you put that money in an account that can't be touched, separate from your checking and savings account. And only use that money for repairs on your home. So let's say you've been living in the home for 3 years and you're putting away about $200 a month and your HVAC goes out. Now the HVAC contractor goes out, takes a look at the HVAC and says, well, it needs to be completely replaced. Well, now you have $7,200 in that account and you don't have to worry about or try to figure out where that money is going to come from. The last thing you want to do is put an HVAC unit on your credit card. Look, things will break. It's just a matter of time. And if you're not prepared financially, it will be a great deal of stress on your life. So budgeting for that now will certainly help. Another thing to consider during this process is figuring out if this is the right time for you. Look, how long you stay in the house can greatly affect the return you have on it. If you're already considering moving in the next year or think that you might be relocated with your work in a year or two, it's probably not the best time to invest in a property. It is very, very unlikely to ever get your money back or to even break even on a property that you sell so quickly, especially in a market with so much uncertainty in its future. I just don't think it's worth buying with only having a short-term hold in mind for that property. Now, one exception would be if you were potentially considering to rent the property out if you moved out of state. This way you wouldn't have to sell it right away and you would be able to protect that asset. But that would really probably be the only time I would recommend buying a house when you're only going to live in the place for about a year or two. Number 2 on this list, determining your budget and your overall finances. Now, we talked a little bit about that earlier in step 1. Having a good grasp on your overall finances and budget will certainly give you a leg up before starting to search for a home. Figuring out what your comfort level is on monthly payment is usually the easiest way to do that before talking to a lender. Now, a lender is going to generally approve you for a lot more than you're wanting to pay each month. So having a conversation around what range you want to stay in on your monthly payment is important. You don't want to become what they call house poor, meaning you buy a house, you're really excited about it. A couple months down the road, you realize the payments are so high that you can't financially live the same life you were living prior to home ownership. This is a mistake I've seen people make in the past, and they have major regrets because of it. Do not let your house become a burden on your life. As I mentioned in step 1, it's really important to kind of figure out your finances around unexpected repairs, having enough room each month to put away for those home emergencies. Also during this time and during this process of figuring out your finances, consider the down payment and potential closing costs because this fluctuates greatly depending on the house and the loan that you get. Your down payment especially will go anywhere from 0 down on a VA loan to 3 to 20% down on a conventional. You can even do 3.5% down on an FHA. A lot of buyers typically stay with the 3.5% FHA or 5% conventional, but again, you'll get a better understanding for this when you sit down with a lender when getting qualified for a loan. Here's a tip though. VA loans are strictly for veterans, so if you're not a veteran, prepare to have some money to put down on the house. Now, closing costs can add up somewhere between 2 to 5%-ish of the purchase price. You know, they're a little higher in today's market because banks are typically charging points now that they weren't charging a year or two ago. As you're adding up these percentages, you're probably coming to the conclusion that you should have a good chunk of money set aside in order to buy a house. Now, don't worry, there are some ways you can pull money out of a 401k or retirement funds to help with the down payment burden. But those conversations should be had with your lender to see which retirement accounts will allow you to do that without getting penalized. Number 3 on the list, know your current lease requirements. There's a few things you should know about your lease before getting too far in the buying process. First, you have to know when your lease is up. You probably want to talk to a real estate agent or a lender at least 6 months before the end of your lease. This will give them and you enough time to get things started and get the process moving where you don't have to feel rushed. It wouldn't even hurt to start those conversations further out than 6 months. Second, know what your early termination fees are. As you're starting to look for homes, you may want to terminate your lease early. If you have a favorable lease agreement where terminating early isn't such a bad move financially, it might be worth it to break the lease and buy the right house when it pops up. Make sure to have a good understanding of what the penalties are to terminate a lease. The last thing about your lease is always have a conversation with your landlord and or your management company about potentially doing a month-to-month or extending the lease on a short-term basis, worst case scenario. You don't want to be stuck in that situation where now your landlord has rented out your house to somebody else or ends up blindsiding you with an enormous price increase for setting up a month-to-month at the last minute. Having a good understanding of what those terms look like will help. Step number 4, get pre-approved for the mortgage. Now, once you've gone through the first 3 steps, I believe you should talk to a lender next. But if you already have a real estate agent, ask them for a recommendation if you do not already have a trusted lender. Agents generally have created excellent relationships with these lenders that they know, and they've used them time and time again, and they know that they can get you to the closing table while providing strong communication to all parties and having your best interest in mind. Again, I would strongly encourage you to talk to a lender as early in the process as possible. This gives the lender time to check your credit and see if there's anything on there that needs to be removed, or maybe an opportunity to push the score up. You may have time to get that corrected. Getting approved for a property is great, and getting approved for a property at the best interest rate possible because you gave yourself enough time to get your credit score as high as it can possibly be before making an offer is even better. Also, most pre-approvals generally last 90 to 120 days, and the majority of them will require a credit pull. If you haven't found a house within that time, most lenders will provide an updated pre-approval as long as nothing has changed financially or employment-wise to you, the borrower. This will keep them from doing another credit pull while searching for that right house. Step number 5, hire a real estate agent. A realtor will help you find the right house, negotiate the right price, guide you through the buying process. They will also provide you valuable information about your local real estate market. This is important because you want to find buyers agents who live in your area that you're looking in. You do not want to find an agent who lives in Canton, but you want to buy a house in McDonough. Those of you who are familiar with Atlanta know that it probably takes you about an hour and a half to drive there, but both are considered Metro Atlanta. It will be hard to keep that agent motivated to show you property a few times a week if they're having to do a 3-hour round trip to show the house. So make sure you ask what area they service. If you have an agent that you love and trust in a different part of Atlanta, ask them to refer somebody that they may know and trust in the area that you're looking for. Referrals are very common amongst agents. Tina and I have access to thousands of agents, not only in Atlanta, but throughout the country. And we can set up interviews to make sure that you get the right agent for your needs. Last thing with real estate agents is understanding commissions, okay? So there's a big myth out there that sellers pay for buyers' agents' commission. This is not true. How it works is listing agents and sellers negotiate commission for listing the property. Some listing agents, brokers, ask for a portion of that total commission to go to a buyer's broker or agent. But this isn't always the case. There's some properties out there where no commission is contributed to the buyer's agent. You don't want to find out about it when you get to the house. Having that conversation with the buyer's agent up front during the buyer consultation will help better prepare you. So let's take this for instance. If your buyer's agent is charging you 3.5% of commission to find you a house, but the house that you find is only offering 1% to that buyer's agent, you're on the hook for the other 2.5% of commission. So make sure you have that conversation up front. So now that we've found the right agent for the right price, let's look at number 6. Start your home search. This is the time of the process where you get an opportunity to really create a picture of what your future house should look like. Because at the end of the day, you're the only looking for a house that fits your needs. So have a very in-depth list of what your must-haves and your really wants should be. This will allow the search to be more effective, and it will be a lot easier to add your favorites and remove your dislikes. When you're thinking about must-haves, try to envision things that can't easily be fixed or changed, like location, type of neighborhood, HOA or without, style of home, 2-story or ranch, number of bed baths, square footage. Now, when you're thinking about your really wants, these are things that may not be perfect, but can be easily changed, like granite instead of laminate, hardwoods instead of carpet, fence in a backyard, updated bathrooms, paint color, things like that. Remember, must-haves will probably be deal breakers, or they really wouldn't be must-haves. You should have a minimum of 3 of them. Your really wants will be kind of a house-by-house, case-by-case scenario. These things change over time, especially as you get more familiar with what's out there for the price that you're looking for. Also, don't get discouraged. You're really, truly not going to find a house that fits 100% of what you're looking for, regardless of the price point. So when you're looking for that 90-95% house and trying to figure out what the 5 or 10% you're willing to be without, remember that 5 or 10% will only be on the short term, because those should be things that can be easily fixed. Also, for married couples or individuals in relationships where both parties are going to be involved in the purchase, it's even more important to have that conversation with your significant other to make sure that you guys are on the same page with the must-haves. So just understanding what your flexibilities are between each other and having that conversation now will help make things easier throughout the process. And don't worry, it's extremely rare for both individuals to be exactly on the same page for must-haves and really wants. Step number 7, finding a house that meets your criteria and making an offer. Once you find that perfect house, you'll need to make an offer pretty quick. Thinking about an offer and figuring out the right price is very important, but thinking about an offer for too long could end up losing that house for you. You never know who recently has seen the house and might also be thinking about it as well. When you're at the point of making an offer on a property, it's very important to sit down with your agent and go over comps for the neighborhood, how long the particular property has been sitting on the market, all disclosures provided by the seller, condition of the property, and the terms you want to ask for when presenting an offer. Terms are usually things like length of due diligence, financial and appraisal contingencies, along with how much you want to put down in earnest money, closing cost, closing date, who you want the closing attorney to be. At this point, all terms are negotiable, and it really is the one time that you're going to have the best opportunity to maximize your leverage for that house. So make sure to let your agent know what's truly important for you during these negotiations. Step number 8, you're under contract. Now it's time to get the home inspected during the due diligence period. Now, due diligence period is that time where it gives you an opportunity to have a general inspection done on the house to check for any issues. Now, this can include checking for structural problems, plumbing and electrical issues, potential safety hazards. For general home inspections, that price is generally $400 to $700 depending on the size of the home. Typically, they go off of square footage. The larger the home, obviously, the more it's going to cost. Note that there are some things that might need to be inspected that a general inspection might not cover, like termite inspection, septic tank, swimming pool, radon test, lead-based paint, maybe some mold testing. All of these generally can add extra dollars to your inspection budget. And you'll need to pay for these typically to get the reports back from all of the inspectors that you hire. So just know that sometimes your out-of-pocket expenses on this will be, or could be, $1,000 to $1,500, sometimes even more. You're not required by law to have a general inspection, but it's highly recommended. Look, your house is potentially the biggest purchase you're ever going to make, so it's definitely a good investment to spend this money on making sure that it checks out. Now, once you receive a copy of the inspection report, if this is the time that you have to kind of negotiate for items that were found in the report that might be pretty significant. Generally, you're looking for major issues like leaky roof, deteriorated plumbing, old electrical wiring, mold, structural damage, maybe even something going on with the foundation. Anything else that might be looked at as like a major dollar item. Sometimes you get lucky and not have anything on there that represents something that's significant and might only have minor things in the report. This could present an opportunity to ask for some of those minor things to be fixed. Remember, the homeowner is not obligated to fix or repair anything that you're asking for. So this is a true negotiation process, and you have the right to walk away during this period as well. But remember, due diligence is usually pretty short considering all of the things that you might have to get checked out and inspected. So make sure that your agent has everybody lined up and scheduled as soon as you're under contract. Now, once all negotiations are hashed out during the due diligence period, the focus shifts to the financial and appraisal contingency period. Now, during the financial contingency, the lender will get the appraisal ordered and we'll push all of your credit, your employment information, your bank statements through underwriting to get you the final approval for the property. Now with the appraisal, there should be a time period that was put in writing in the contract that gives a certain amount of time for the lender to order the appraisal and the appraiser to provide an appraisal for the home. The lender does not have any direct contact with the appraiser. It's all done through a third-party company. But the third party picks from a list of 20 or so lender-approved appraisal companies. There are those rare occasions where the contract price is higher than the appraisal value, and in those cases, it creates a third negotiation. There are three options in this period. The seller can reduce the sales price to the appraised value. The buyer can agree to pay over appraised value via cash at closing, or both parties can come to some sort of agreement, maybe somewhere in the middle, or whatever's negotiated. If none of these three options are executed, the buyer or seller has the right to terminate the contract. This will depend on how the contract was written. If the appraisal comes in at value or agree to reduce the sales price on a low appraisal, then this part of the contract is complete and usually you're on your way to the closing table. Before we get there, step 10, get homeowners insurance. Before you close on a house, a lender will need you to set up homeowners insurance. This will protect your investment and ensure that you're covered in case of accidents or damage to the property. Shopping around for a great homeowners insurance company is almost as important as finding the right lender in the process. The pricing on the homeowners insurance varies greatly and can significantly increase your monthly payment if you end up going with a higher priced company. Usually, bundling this with your car insurance will help reduce the overall cost. Let us know if you'd like some recommendations, and we'd be happy to share with you some companies we've used and recommended in the past. Step 11, final walkthrough. Now, the final walkthrough is generally done the same day as closing or sometimes even a couple days before, but generally it's pretty close to closing. As a buyer, you do have the right to walk through the property before closing to check out and make sure that any repairs or requests that were asked for during the due diligence period has been completed. This also gives you an opportunity to make sure the house is in reasonable condition and there's no active leaks or major holes in the wall or anything that might be a significant issue that has happened to the home since the home was inspected or the last time you walked through. Number 12. Now this is the day we've all been waiting for, closing day. Closing day is certainly the best day of the entire process. This is where we all meet at the attorney's office and sign the final closing documents. Some states have title companies, but Georgia is an attorney state. Generally, buyers and sellers sit across from each other. Both agents usually show up. Sometimes even the lender stops by, and it's usually a great experience for all parties. This is an opportunity for the buyer and seller to kind of get to know each other. Buyer can ask specific questions about the property that might not have been uncovered during the inspection or the walkthrough. Now, once everything's signed and funded, which takes about an hour or so, the seller hands the keys over and congratulations, you are officially a homeowner. Look, I know this video was a long one, but I hope it really helped you bring some clarity to the process. Buying your first home should be a fun experience and not a ball of stress. So if you'd like any more information or have any questions about home ownership, please feel free to reach out. We would love to hear from you. Again, Scott Ritch, Ritch Realty Group. See you at the next one.